So you're thinking of buying a house, but the prospect of asking a lender for hundreds of thousands of dollars is more unnerving than spiders, clowns, and public speaking combined. Well, you're not alone. In a survey conducted by Cent Mortgage, 44% of respondents described the mortgage process as intimidating or scary, and only 70% said that they understood the process. Despite this, an overwhelming 92% of respondents believe that buying a home is critical to building wealth. So how do you get started, and what's the process look like overall? Let's get into it. Step 1. Loan shopping and pre-approval. Like with buying anything, you can and should shop around for a mortgage loan. This starts by getting a good understanding of your credit and your home buying budget. Understanding these factors will help you to shop for specific types of loans and terms. As an example, the most common type of mortgage in the US is a conventional loan. Most lenders offer this, but there are other options depending on your situation. When shopping for a mortgage loan, you'll fill out an application for each lender, where they ask for some basic information like name, address, date of birth, and marital status. They'll also ask for less basic stuff like annual income, employer, and places you've lived for the past 2 years. Last, they'll run your credit to see if this process should even be moving forward. This whole process can be done online, but a loan officer will usually call you shortly after submitting your application to review it and ask you a few follow-up questions. This has actually happened to me within minutes of submitting the application. Once this is all complete, you'll be pre-approved, and you'll get a loan estimate stating how much you've been approved for and the terms of your loan. Be prepared to do this a few times if you're shopping around for a loan, as none of these systems seem to talk to each other. After you've collected a few loan estimates, you'll compare these to decide which loan and loan terms are best for you. Step 2. Loan processing. After you've decided on a lender, you'll go into the loan processing phase. The lender will assign you a loan processor who's responsible for collecting all your required documents. This part kind of sucks. If you're like me and live in a perpetual state of ordered chaos, this part may wear you out a bit. The lender will ask for documentation to basically prove that everything you say on your application is true. Some of these docs include your home purchase contract, bank statements, W-2, tax returns, lease agreements, pay stubs, employment letters, investment account statements, and any other documentation to prove income, employment, or assets. Honestly, if you're organized, it's a semi-easy process, but I've done this 7 times including refis, and there's always some documentation that I have to go dig for. Speaking of documents, be prepared to sign some. There's a bunch of things you have to sign up front for processing, but that's just a rehearsal for closing. More on that later. You may not like processing, but if you like this video, don't forget to like and subscribe so you don't miss out on future informative videos like this one. My goal is to give you the tools and info you need to level up and take greater control of your life. Step 3. Underwriting. This can either be the easiest or toughest part depending on your temperament. During underwriting, you do virtually nothing. It's a great change of pace from the headache of the processing step. This is the point where the lender's underwriters evaluate your file and start the process of approving your loan. Or not. There's a lot of factors at play here, but typically if you make it into underwriting, you're likely to get approved unless something significant changes. I say underwriting can be tough because it's the point where you will hear very little from your lender for an extended period of time, and this can make people very nervous. Just remain calm and think of how happy you are that you're done with processing. Something to consider is that this is the time where you need to be as responsive as possible to your loan processor. Underwriters will sometimes ask questions or for additional documents, so make sure you're on top of this or it could delay your closing. If you haven't already locked your interest rate, you can typically do it during this time, though the timeline for your rate lock is dictated by your closing date, which is outlined in the sales contract for the home you're purchasing. Step 4. Closing. Once your file gets out of underwriting, you finally made it to the finish line. Or maybe it's more like the final boss. Either way, get your signing hand ready because a stack of papers awaits you. The lender will send all documents to the closing attorney or title company who will facilitate the closing. They will also send you your closing disclosure, which will tell you the terms and cost of your loan. It's critical that you review it carefully as this is what you'll be agreeing to for your mortgage. This should be pretty close to what you saw in your loan estimate, so there shouldn't be any surprises at this point. Typically, closings are done in person, so on closing day, you'll go into an office and sit across the table from the seller as you sign your life away. The appointment takes about an hour, and once the signing marathon is done, you get the keys. Congratulations, you're now a homeowner. Or you would be if you weren't still trying to figure out what type of loan to get. Thankfully, I have a video for that right here.